We making moves. We making major moves. We making moves. We making major moves. We going all in, like we got nothing to lose. We making moves. We making major moves. We making moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. It's been a good hot minute since I've been on the mic spitting like I'm a hip-hop artist. Alright. Recently in the news, what's been going on is the BRICS are coming out full force before the G20 summit. The BRICS summit's coming up as well. And that's in October. That's in October. So what is coming out and what's playing out now is mBridge is coming out now. That's a reality. They started talking about this. They've spoken about last year, 2023, about the digital currency coming out, which is backed by gold and a payments platform. And now we have visualization of what that could look like. Right? Here's a debit card of what that could potentially look like. So my man Smoke dropped this 4 hours ago, and it says, yes, the BRICS currency will reset the banking industry. Let's jump into this. So in conclusion, the introduction of a new digital currency for the BRICS countries, together with its potential as a cryptocurrency, it will be a cryptocurrency, there's no doubt about that, is a dynamic. And when I say cryptocurrency, I don't mean it is going to be XRP. The BRICS will create their own multi-CBDC, which will contain all the information needed to adhere to the various jurisdictions involved in this multiple arrangement. So it's a dynamic and multifaceted topic with far-reaching implications. While the challenges are obvious, including regulatory hurdles, volatility, and the need for international cooperation, the outlook for such a currency is promising. It has the potential to reshape financial systems, stimulate economic integration between BRICS and acceding nations, and influence global economic dynamics. Certainly, the appearance and use of a new composite currency will attract a change in the composition and the value of a financial and the capital markets around the world, and will reset the banking market as well. Wow. I don't know what else you're going to say to that. I don't. And in the news here, we got the BRICS outline proposal for BRICS DLT cross-border payment system. Right? The BRICS had come out with their BRICS payment system already, the BRICS Pay, if you will. So a new research paper out of Russia proposes the future of the international monetary and financial system. The country is the current chair of BRICS, which is meeting next week. One of its proposals is a CBDC and DLT system to support local currency payments. Right? So we have the system already aligned, known as mBridge. Right? The mBridge. Inside this mBridge, this multi-bridge, allows for the rails to connect the various jurisdictions of whoever's utilizing it. Right now, China and UAE is utilizing it. For the pilot, that was China, UAE, Thailand, and I believe one other one. I don't remember immediately, though. So while the paper makes some interesting points, the mixture of facts and propaganda undermines the document's gravitas. The document was authored by the Ministry of Finance, the Bank of Russia, and Yakov and Partners. So in January, BRICS expanded its membership from the original 5 members. So you have Brazil, Russia, India, China, South Africa, with the additions now of Iran, Saudi Arabia, UAE, Ethiopia, and Egypt. Okay, so let's continue here. So the BRICS Bridge digital payment platform to boost trade between groups states. So again, remember, mBridge is already in MVP state, minimum viable product. This happened this year. This is now October 17th. Today is 2024. There's a full moon tonight, known as the Hunter's Moon, which signifies and indicates now this is the time to go hunting, the legal time to go hunting, or the time to go hunting as a sovereign individual, not legal. Let me take that legal word out. But mBridge had went live in its MVP state with China and UAE being the first 2 connecting members now, when you saw that the UAE is a part of the BRICS. So the creation of a BRICS digital payment platform, BRICS Bridge, mBridge, will help increase mutual trade between the member countries. So recognize that there's a tech stack underneath and then the physical stack on top, right? This is the BRICS bridge now, where the members can compiling in at this point, and below that you have the tech stack underneath. So when I talk to you about these various things, I look at it from the tech stack of things. When I talk about the RTGS, the real-time gross settlement, I'm looking at it from the tech stack side of things. Now we're connecting both of them, the tech stack and our real world view. Okay, so the Russian Finance Ministry and the Central Bank of Russia, together with BRICS partners, are working on the BRICS leaders' report on how to upgrade the international forex and financial system. It will contain a number of initiatives and recommendations. Consideration of this report may result in creating a BRICS multilateral digital payment platform, right? The BRICS bridge, which will help bridge the gap between the financial markets of the BRICS members countries and increase mutual trade. No doubt. No doubt. So we have a bridge in line. Now we have this bridge that connects. So picture this as the infrastructure. We have UAE over here. We have China over here. Eventually we'll have Thailand here, Singapore here, and whatever other country. Brazil here, India there, Africa down there. We'll have all of those. But when that payment comes through from, say, Brazil and meets that center point, that intermediate point for it to change, what is it that's making that change happen? Is it just from regulation, or is there something else that exists, like an mCBDC? If you haven't heard that term, get familiar with it. mCBDC is a multiple CBDC. There are 3 different models that I'm aware of. Model 1 enhances the compatibility of national CBDC systems, so each individual jurisdiction, by aligning regulatory frameworks, practices, and messaging formats. This includes coordinated national ID schemes. Ripple, as of today, had just passed their digital ID vote. Digital ID is a reality now on the XRP ledger. Model 2 seeks to interlink national CBDC systems, for example, via technical interfaces that process transaction information across currency areas. This includes mutual recognition of national ID schemes. Model 3 creates a single CBDC system that hosts several national CBDCs in a single platform. Right? This approach lessens the need to largely align national CBDC systems as required for Model 1, while going beyond merely interlinking national systems. So when you're just linking international systems, Canada to US, right? That's a bilateral agreement. That's all it is. But now we're looking at multilateralism, globalization, if you will. Multilateralism, multilateral agreements. So it's more than just me connecting to you. It's now me connecting to you, connecting to this, that, and the other, and everything, okay? That's how that works. So from here now, this is a document I've been reading as well. Let me just pull this up here. So the case for a multiple CBDC arrangements. This is what I want to show you here. In a domestic situation, there's a natural, trusted central party. The central party is trusted to maintain and upgrade the ledger that records the assets owned by transacting parties, since it is the party's responsibility for the issuance of domestic currency. However, at the global level, again, we're talking global now, right? There is neither a singular global currency nor a dominant trusted central party. It's a trustless society here. It's trustless globally as well. Hence, an mCBDC arrangement is preferable to the creation of a global stablecoin. Okay? On a hypothetical global network, central banks and financial institutions from many nations would deal in numerous currencies on a single platform. Right? We're talking about this here, a single platform being an mBridge. Central banks should look to foster a diversity of convertible national currencies and strengthen monetary sovereignty in the digital age. Within that mBridge, there will need to be a central currency, a multiple currency that adheres to the various jurisdictions attached to it. Interoperability among participating CBDC systems would be required for multiple CBDC arrangements. Interoperability is a broad concept that can refer to any feature of a system that allows it to communicate with other systems. There are currently 3 methods, which we went over, by which payment systems can accomplish cross-border and cross-currency interoperability. So, compatible standards, for example, similar regulatory framework, market practices, messaging format and data requirements, interlinking systems, and establishing a multi-currency. So the frictions that exist in today's cross-border, cross-currency payment systems, as well as the manner in which domestic systems might interact with them, are well understood. On the other hand, though, research on cross-border interoperability in CBD systems is still in its early stages, and this is a document from 2021. So let's jump over to, where do you go? So here we have Daniel Eden. He is an individual with the BIS. I'm not sure if he's still with them now, but he was working on the mBridge prior to them going live, along with, what's her face there? Benedict Nolans, who's out in Hong Kong. She was working with the HKMA through the BIS, the BIS Innovation Hub. This individual here, Daniel Eden, is still with them, and he's also taking part in the the mCBDC concept and scheme as well. So let's listen to what this gentleman has to say. Believe me, you're gonna want to hear it.
Thank you so much, Jenna, and thank you everybody for having me here today. I'll give a quick, maybe 10-15 minute kind of overview of the mBridge project, and I'm sure I'll leave a lot of room for questions and follow-ups. Maybe before I forget, I'll mention that the views that I represent are mine only and not necessarily those of the BIS. Okay, so hopefully everybody can see my screen. Project mBridge, the tagline of the project is connecting economies through CBDC. And hopefully by the end of this presentation, that vision will be clear. This is a joint project between the Hong Kong Monetary Authority, the PBOC's Digital Currency Institute, the Central Bank of Thailand, and the Central Bank of the United Arab Emirates. The vision of the project is to build a minimum viable product, so an MVP, and eventually a production-ready multi-CBDC platform for cross-border payments. There's 4 key points that I think this project hits on. The first one is to improve solutions for key pain points in international payments. The second one is to advance cross-border settlement in central bank money, so in M0. The third one is to support the use of local currencies in international transactions. I'm sure we'll talk about that more at length over the course of this discussion. And the fourth one is to create an opportunity for new and innovative payment products and services. We'd like to do all this while, of course, safeguarding currency sovereignty and monetary and financial stability. We would do those things by integrating policy, regulatory and legal compliance, and privacy considerations. And I'll elaborate on all those things as we go. The mBridge platform directly connects CBDCs of multiple jurisdictions using custom-built DLT that we've named the mBridge Ledger to support real-time, peer-to-peer cross-border payment. So let's first just quickly talk about the membership and who's involved. So the BIS Innovation Hub sits at the center of the project and chairs the steering committee out of our Hong Kong center. And then we have each central bank representing a different subcommittee. So the HKMA represents the legal subcommittee, the CBUAE represents the business subcommittee, the Bank of Thailand represents the policy subcommittee, and the PBOC is the chair and representative of the technology subcommittee. So that's just a high-level overview of the internal project participation and governance. Around that, we have a perimeter of observing membership to promote the transparency of the project and encourage as much dialogue and participation. And I think you can see kind of a broad global reach of the observer tier on this project. There may have been even a few more joiners within the last couple of weeks that may have not made it onto this slide deck yet. Project mBridge didn't come out of nowhere. It's an evolution of many projects that kind of have led up to this, probably most notably the work that was done between the HKMA and the Bank of Thailand that starts off as early as 2018 along with individual work that started as early as 2017 by the PBOC and work that was done by the UAE, by the CBUAE that started as early as 2020. So this long winding road between all these different projects finally kind of culminates in what we named Project mBridge, with the joining of these four central banks into a unified project in 2021, all the way to the successful pilot in 2022 using real value transactions. And I'll elaborate more on what this pilot entailed and how the platform was structured in this kind of final phase of the project. So cross-border payments are typically made through a global network of correspondent banks. I assume that if you're on this call and you're attentive to the problem space, you already know this. They involve multiple intermediaries, and in general, cross-border payments feel often like this slow snail crossing the street. As a result, they exhibit mostly high cost, low speed, lots of operational complexity, and limited access. So those are kind of the four key pain points that mBridge tries to solve for, outside of kind of the future-facing, opening up an innovative ecosystem for services that maybe we don't know about yet today. We built a platform, and the platform follows something that we call the common platform approach. I'll spend a little bit of time kind of looking at this high-level network topology, explaining what the platform does, and then I'll move and talk a little bit about the pilot itself. So I think that if there's one image that kind of represents how the platform works, I think it would be this one right here. So the common platform approach, really you can think about that as the circle that's in the middle. What's important about this circle is that it imposes a certain amount of common standards that are specific around kind of the settlement infrastructure. So it's a common settlement infrastructure for all the participants on the network. It's worthy to note that the participants on the network, as you can see, moving from the center outwards, are the central banks, and then the commercial banks corresponding to each central bank. The corporates and any other business function users actually sit outside the platform and request transactions from the direct participants on the platform. So there's a distinction between direct participants that are central banks and regulated financial institutions, and everybody else that would sit outside the platform. Within the perimeter of the platform is divided up into four quadrants, in this case because we had four participants. If there would be more participants, which there will be in future phases of this work, of course those quadrants would get smaller and smaller pizza slices. Each quadrant represents a sovereign jurisdiction. You can think of each quadrant as being sponsored by the central bank that represents that jurisdiction. The onboarding and offboarding of the commercial banks is done by that central bank, and there are certain rules that can be there are certain rules that can be relevant to each quadrant that are mostly around custody of funds. So you can think about the fact that the central bank is the governing structure on their quadrant, and that central bank not only can onboard and offboard their commercial banks, but they can also set different custodial rules for their commercial banks. At the center of the platform, of course, lie the central banks, and what you can see is a little bit of a difference between the arrows that connect those central banks versus the arrows that connect the commercial banks. What that means to indicate is that the central banks that sit at the center of the platform are fully connected and effectively operate the consensus protocol of the platform itself, meaning that they're the ones that operationally kind of keep the platform up and running. So on top of that, so we have two layers. We have the circle that is the common settlement structure. We have the quadrants that are superimposed on top of that are the individual jurisdictions. And then overlaid on top of that, the third kind of layer that you should think about in the topology are the arrows themselves. And the arrows you can think of as the pipes through which the CBDC moves. And you can see that the pipes form a connected graph between the central banks running the consensus protocol, and all of the commercial banks effectively feed into the central banks who operate the platform. These arrows can move independently. The pipes move independently of the jurisdictions, meaning that, of course, a CBDC that's issued within one jurisdiction can freely float into other jurisdictions, enabling this peer-to-peer settlement in central bank money domestic to the context of the transaction. What are the key attributes of the platform itself? There's 6 of them that are noteworthy. The first one is that we have central bank money on ledger, so central bank money that is issued directly onto the ledger. The next one is the ability to take offshore delivery, and this is probably the most significant departure from the current model, is the ability to accept central bank money in an offshore jurisdiction. The third one is settlement finality. So the platform enables point-to-point instant settlement with finality in real time 24/7. The fourth one is integration with RTGS systems. So the mBridge platform doesn't require as a prerequisite having a domestic CBDC. The fifth one is atomic payment versus payment. So the ability to do PVP transactions in an atomic way, such that the transaction settles if and only if the other leg of the transaction settles. So atomic comes from the word indivisible, so you can't separate them into 2 single transactions. They either settle together or nothing at all. And then the last one is single platform interoperability. It connects central banks and commercial banks across jurisdictions because we're using this single common platform approach. Now, I don't know if
So we learned a bit about mBridge. We had spoken about the mCBDC model and architecture in 3 different types to begin with in the beginning of this video. So now this is Daniel Eden again. Again, because he's one of the main people that I'm aware of that works on these projects here. So this is talking about the mCBDC. So the mCBDC system connects multiple CBDCs using a hub and spoke model, enhancing cross-border transaction efficiencies through interoperability, FX conversion, that's foreign exchange conversion, and potential blockchain integration. Leveraging DLT, distributed ledger technology, smart contracts, and cryptographic security. It offers 24/7 availability, cost reduction, transparency, and financial inclusion. The mCBDC is a driving mechanism within the mBridge model that allows for the foreign exchange of multiple currencies and respecting each jurisdiction's regulation. Let's hear what he has to say.
Case is pretty simple. If you look at the arrangement today, a payer would have to go to the originating bank, to the respondent bank, to the FX market, to the correspondent bank, to the receiving bank, and to the payee, and that's probably the shortest life cycle chain. In an mCBDC arrangement, what you see in the core is that you can take 2 payment service providers, those could be banks, plug them into an FX or liquidity provider, and give them direct access to each other. So you can think about this as horizontal interoperability, because potentially the CBDC that exists in the blue for the first payer and the CBDC that exists in the red for the payee are completely different systems, potentially on a technical or semantic or business level. And that's what we think about when we think about multilateral CBDC and interoperability.
So why are these 2 projects important? Why is the mBridge important? Why is mCBDC, multiple currencies, CBDCs, important? Let's hear this individual, what he has to say from the Nelson Mandela Institute, right?
Apart from the policies, the important thing is also about the standards. So how do you create a standards of settlement, which is what the project mBridge is, mCBDC is trying to take up. And considering the stage in which we are in, unlike other countries which are developed countries which have got the way in which they have to settle themselves is already standardized to a certain extent, and they only need to have interoperability between CBDCs as an object. Here we need to first of all bring these different countries' objectives to a particular uniform stage, and then we get into the interoperability.
They are the standard. mBridge is the standard. mCBDC is the standard. The standard. I don't know what else to say to that. All right, it's either you're jumping on board or you're not. We got some companies out there that are trying to be and act in a certain manner, but are not coming through as they need to, right? They're not coming through as they need to. People believe that they're adhering to policy or governing body framework, adhering to guidelines that exist within the ecosystem already, but they don't. And unfortunately, some people are going to get wrecked, going to get their asses handed to them because they're not following the breadcrumbs left for us to follow. If you're going to follow regulatory adherence and regulatory guidance, make sure you're following it. Do not deviate because something is the largest and the most popular, right? When you follow the herd to the most popular thing, you end up getting wrecked, right? So here's a video on the full breakdown of mCBDCs and mBridge. as stated by the BRICS currency think tank. All right. Again, I only bring you guys the stuff that you need to hear directly from the horse's mouth. Right.
For radical intervention that breaks us out of this pervasive developmental paralysis that I've been talking about, and this tends to widen our social inequality. So perhaps the CBDC integration offers us that intervention that we seek. The Bank of International Settlements identifies 3 potential models for multiple CBDC systems. These are the compatible, the interlinked, and the integrated. In summary, the compatible model is based on central banks aligning the regulatory systems and building in common technical standards. Once all these systems are in alignment, it becomes more simple to onboard the operational processes of exchange. However, the model requires some supranational framework that is developed and defines the common standards that must be applied across the countries. The single euro payment system is one such system, and you can start to get a sense of the complexities in defining those common frameworks. The interlinked model is based on central banks holding a series of foreign currency accounts for each country that it wishes to trade with. It introduces a shared technical interface which underpins how and when the central bank settles the balance of cross-border payments with the country. However, this system of protocols compounds in complexity with the addition of a new country. And so there's a need for substantial technical expertise to manage the system, and the scalability of the system is also a risk. And it requires each country's central bank to replicate complex clearing systems. The integrated model, which is recommended by the BIS, involves setting up a shared mCBDC bridge to which central banks are onboarded. The central banks agree to the rules of exchange and the underlying technical requirements for their respective CBDCs. Here, the process of onboarding is much simpler because integration happens in one location and is not spread across every central bank, as in the interlinked model. The downside of the system is that it requires central banks to relinquish some control over the governance arrangements and the infrastructure decisions implemented in the system. And relinquishing this control is the leading sticky point at this problem, as both governance and resilience of these systems is foundational for the stability of the country's economic and financial systems. One method to address this issue about relinquishing control is by unbundling the technology stack used in the mCBDC bridging platform. The Monetary Authority of Singapore has looked at this problem and proposed unbundling, which involves separating the traditional responsibilities of the central bank from the act of exchange. So in this instance, the bridge or the common platform shared between countries takes responsibility for the application of exchange, and then the central bank has a choice to manage the domestic controls traditionally carried out by the central bank related to governance and risk management. Thus, the central bank then designs their CBDC in a manner which can interface with the exchange application. This exchange application could either be shared by all participating countries, or the country could develop its own application which interfaces with the bridging platform. The shared bridging platform also supports speed, allowing countries to immediately pay each other without costly intermediary corresponding banks involved in the change. And then your end users can then transact and have access to payment services using their country-specific CBDC wallet. In essence, this unbundling of the technology stack used for the mCBDC integrated model involves distributing the regulatory and governance powers between the bridging platform and the central bank. So thus, the shared bridging platform acts as a clearing center that is responsible for exchange rate conversions and settlements. And then the platform can set the standards for CBDC communication, and then also determines the minimum requirements for exchange. The central bank must design its CBDC and exchange platform to interface with that common bridging platform in a manner which agrees with these minimum requirements for exchange. Critically, the central bank's messaging standard must be able to interface with the bridging platform's requirements. If the standards are consistent, the central bank can then implement how it controls its monetary policy in terms of how it manages its processes of issuance, exchange, currency redemption, and circulation. And then the central bank can determine who is an authorized operator who has access to the currency and the infrastructure and has its ability to set the domestic rules for technical integration, the legalities of how business is conducted related to your know your client and your anti-money laundering verification steps. And so this relates to how security is managed and what those operational standards are for transacting with a CBDC. In the spirit of removing gatekeepers, one must also understand the consequences of introducing a system dependent on intermediaries, particularly in the banking sector. Slow and expensive international transactions are a consequence of building too many intermediary corresponding commercial banks into the transaction chain. And then each bank then must perform its own KYC and AML checks before clearing those transactions. And these checks are generally human intensive and therefore tend to be slow and expensive. An automated system, perhaps, which centralizes the verification processes at the point of exchange, perhaps can do away with many unnecessary middlemen in the chain. So the goal for us here would be to promote person-to-person exchanges with minimal intermediary input. Your retail CBDC model, opposed to the wholesale CBDC model, is based on your central banks providing the infrastructure that allows for a high volume of low-value transactions that can be exchanged between individuals and businesses. Thus, the retail CBDC provides an alternative mechanism to participate in the economy, and this system then disrupts perhaps and disintermediates the traditional financial systems. So in this vein, the end user effectively holds a CBDC account directly with the central bank, which it can then use to transact with without needing to engage directly with a commercial bank. And with more commercial banks included in the chain, as I mentioned, your transaction fees then increase. So in promoting payment diversity.
Wunderbar. So I hope you have a better understanding and better idea and concept of what they built through the mBridge, because now it's an MVP, minimal viable product. And let me show you what comes next. After the MVP, we have the MPP, or MMP, sorry, that's the next step following the MVP, known as the minimum marketable product. At that point, you're going to have individuals marketing, like, hey, I guarantee you're going to start seeing advertisements coming out for mBridge soon. Not advertisements for you and me, it's for central banks. Remember this, for their which they use for corridors for their CBDCs. So you're going to see this soon. You're going to start seeing, once stablecoins go live, other countries may want to jump on this opportunity here to be able to transact cross-border. For that to happen, they must adhere to FATF's travel rules, Financial Action Task Force travel rules, which is carrying money substances cross-border. Right? I'm going to come off this now. I hope you all learned something from this. I'll catch you on the next one.
We making moves. We making major moves. We making moves.